Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everyone. My name is Sarah Shome. I'm one of the finance brokers here at Positive Money. Now, normally you're used to seeing Kang on your Friday mornings, but he is away this week, so you're with me. So what I wanted to talk about today, we've had a few inquiries around from first-home buyers, but what I'm noticing as a trend out of those inquiries is that when it comes to being a first-home buyer, it's a whole new ballgame, and many of you aren't sure where to start. There's a lot of confusion around a lot of the, what would you call, terminology and things like that. So what I wanted to do today was just sort of break that down a little bit and talk about what you're eligible for, what grants are available, the difference between concessions and grants, and what is available and applicable to you when you're buying. So I think the first step when you're looking to buy is to sit down, and actually before you even sit down with me, is to have a look at what you want, okay? Because that's probably going to be one of my first questions is, what is your budget? The budget will also dictate grants are available to you well. So probably have a look on, realestate.com.au or Domain, those sorts of ones. Have a look in the areas that you're interested in. So at least then we can start to funnel it down. Then come and sit down with a broker and start working out what is your borrowing capacity. Okay, so we want to be talking about if it's an investment or if it's owner-occupier and so on. With owner-occupier, then we can work out what's your borrowing cap, make sure that we can afford to lend you where you want to be buying or the bracket that you want to be buying with. And we can have that conversation throughout our catch-up. In that catch-up, we tend to discuss a lot about what is applicable to you. So the thing you see a lot on the news and online is around the first home buyer government grants. Okay, so when we say grants, there are so many different grants and not all of them will be applicable. Can you stack them up? So can you get a grant and a concession? Yes, you can. Okay, so it's not just a case of picking one of those. It's a case of, let's bring in everything that we can to help you get into your first home. So let's start with stamp duty concessions. So stamp duty is the revenue that is paid to the State Revenue Office based on the sale of your home, on the purchase of your home. So that concession or the stamp duty can be discounted for you depending on your purchase price, and it varies from state to state. The highest being New South Wales has the highest level of purchase price cap. So stamp duty concessions apply up to 800,000. And then, most of them are sitting around the 750 mark. So Victoria and South Australia, Tasmania, they all sit around the 750 mark as a maximum purchase price. The lowest being WA, that's 600,000, Queensland being 700,000. So what that means for you is that there is it's staged. So there's, for example, with Queensland, it's a $600,000 purchase for full stamp duty concession, meaning you don't pay any. And then in Queensland, after that 600 mark, then it's up to the 700,000 mark. So you still will get a concession, but a discount on the stamp duty payable. Then we've got things like the low equity scheme or low deposit scheme. Okay, and these are the ones that we're seeing a lot online with and in the news. So these are the ones that the governments bring out with their election promises, and what that is means that the government basically acts as your mortgage insurer. So what is a mortgage insurer? Okay. Traditionally, we can lend up to 80% of the property value before mortgage insurance applies. So it means that the bank is happy to accept 80% of the property value as a mortgage. And then after that, their risk is a little bit exposed. So then what we do is we use what we call a mortgage insurer, well, LMI. We tend to use that term a lot. And the mortgage insurer will protect the bank in the event of default. It's a one-off premium, tends to go on top of your loan, but that allows us to borrow up to 95% of the property value without, meaning that you'll only put in 5% equity plus your costs. Okay, and that cost will depend on your stamp duty concessions and so on. If you're buying investor, that obviously discounts and that drops to 90. So that's traditionally what we see in lending. Now, what that means for you in terms of the government grants is that with the deposit schemes, you don't actually get that premium. The government has limited places available and they divvy them up across 23 lenders. And then we have to find a place available for you. Now, there are caps on those. They're obviously designed to help people get into the market that may not traditionally be able to get into. And so there's a lot of things in there that we need to make sure that you qualify for. But when you sit down in front of a broker or a lender, they will be able to run through those qualifying criteria for you. So ideally, if you qualify for that, so, let's take the prime example of the income qualification. That's probably the first big one. It's 200,000 for couples, 125,000 for singles. Then, if we pass that, then, now we don't need to put in as much money. Okay, so then, that's going to help you in terms of your purchase and so on. What we look at during your appointment is not just your borrowing capacity, but we also need to look at how much you're looking at contributing. So what we do is a thing called a funding table, and the funding table just goes through how much money you've got to put in. Okay, so let's say, for example, and this is where I guess it gets really confusing with the terminology. So we've got a borrowing capacity, and the borrowing capacity just means how high can you jump, okay, and based on your income and your financial commitments and your expenses. So, for example, you might be able to borrow for $1 million. Let's just call it that. But then when we go through and we work out how much you want to buy for, let's say you want to buy for 700,000, right? then you don't need $1 million. You just need what the loan amount for that 700,000 would be. Okay, so again, borrowing capacity just is how high is the ceiling, and then the funding table brings us down into the loan amount. Then in that funding table, we work out, grants, concessions, government places, and so on, and what is applicable. That leads us to a loan amount, and then we take it back and we say, okay, based on this funding table that the borrowing capacity that we have, is that within the realms of your borrowing capacity? So let's say, as an example, you need to borrow, $620,000. Your borrowing capacity was up to $1 million. So now what lenders do we have available for purchase of $620,000 as a loan amount? So, probably most likely all of them. So that means that now we can funnel down the best lenders and best rates for you, and so on. So it can be really confusing to get started. And, even throughout this, we've already now jumped through government grants and concessions. Then there is a thing called the first homeowners grant. And I think that's where a lot of us get confused, because it's one that's been around for the longest. Okay. Now, again, depending on what state you're in, that can vary. So, for example, Victoria and New South Wales, you're looking at a $10,000 grant. Queensland, Tasmania, got $30,000. And South Australia doesn't call it a grant. They've got a benefit of up to $50,000, which is made up of a mixture of different things. So what that grant is it's only applicable when you are buying a house to construct or a newly built property that no one's lived in. So again, you can see the qualifying criteria kicks a lot of us out in this traditional market. Traditionally, I find with first home buyers, we're looking at existing homes and probably in the lower end so that we can get into the market with lower deposits. So my advice to first home buyers would be, because all of this is so confusing, and it's confusing even in the finance world, okay? So you want to make sure that you're getting everything that you're eligible for. So have a chat to your broker or lender, and then see what is around and what is applicable to you and your specific situation. And I really think that's going to be the easiest way to start demystifying a lot of what is around. When you're going through the funding table, that's when that conversation really starts. But what you want to do is your homework before you sit down. So if you're going to sit down in front of me, my very first question will be, have you had a look at prices? Because otherwise, we're just sort of stabbing in the dark when it comes to the funding table and how much you want to borrow and so on. So what we want to do is sort of preempt that question first. So jump online, have a look, get all excited, and then, finance will come in and tell you probably can't afford it. At least then, and look at a wide range as well. So, look at the lower end of the market and where you'd be more comfortable in what suburbs, and then look at, where you would comfortably be at in the higher end of the market as well. So then again, when it comes to that conversation and we've worked out borrowing capacities and so on, we know we can really get a good quality conversation out of it. Once we've worked out your lenders and so on, that's when we can go through to rates and repayments and offsets and all those sorts of things, but without bombarding you. That's really refining the features of loans. So I wouldn't get too caught up in that. I would probably focus on the first part now in terms of, how much you want to buy for and so on. You will get a conveyancer or a solicitor when you actually buy something. So that conveyancer is your legal aid, and they will be able to help you with all the qualifying and the paperwork for all these government grants. But we already sort of know what to expect out of your appointment anyway. So that's going to be a lot more clearer to you. So I think that's probably really it. There's a it's a big wide world. It's very confusing, and particularly when we need to jump into the world of buying homes, it can be quite daunting, particularly when you don't know what you don't know, and you're relying heavily on the information around you. Be cautious online, and make sure that the info that you're asking, Google or ChatGPT, which I know is my personal go-to, is factual to you. Okay, so again, you might be able to get a bit of a gauge of what you're applicable to, but definitely have that conversation with your broker or with your lender. So that's it for me. Thank you guys for joining. I really appreciate it, and I will see you next week.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.